Hello traders, welcome to KinFX Academy YouTube channel. My name is Akinola Kin. I am the lead instructor. I welcome you to this particular video on how to trade volatility 25. You know, there are some things you should consider when trading volatility 25. Number one is that you should know that volatility 25 is one of the most very volatile markets in synthetic indices. And when market is volatile, it can be of good to you and it also can go against you. But if you have your approach very clear, you should be able to the volatility should be in good for you. So guys, let's quickly go to the video and let me show you what I always do when I want to trade volatility 75. Number one thing is to go on daily time frame, which is 24 hours time frame. What am I looking for here is just to get the direction of the market, that is where the market is facing, the market trend. That is what I usually look for on 24 hours time frame. So guys, once I'm able to get the market trend on one daily time frame, which is 24 hours, um going to bring out my trend line. I don't need long time information. I'm a day trader, so assuming I'm swinging now, so I should be shrinking my charts to find a very long time information. But no, I'm just a day trader, so I only need what is happened recently in the market. So after getting this particular trend, you understand, I'm going to go to 4 hours time frame to see clearly about the trend. So on 4 hours time frame, I can still see another inner trend on 4 hours time frame. So I'm still going to bring out my trend line to pick out this immediate inner trend on 4 hours time frame. Now I have a two trend, the inner trend and the outer trend, the 4 hour trend and the 24 hours trend. Now I always find my entry on smaller time frame, like 15 minutes time frame, you understand. So once I go to the 15 minutes time frame, there's these certain things I usually look out for. I like to enter my trade at a major level, that is a level that I know that many traders will also want to take decision, that is the support and resistance level. I love those level very well. It's been long that those level has been working in the market, and they are still working, and they are still going to be working. You understand? Support and resistance level are very core factor for every trader to know how to add it to their trading arsenals. You understand? So I like to make use of that a lot in every market, not only synthetic indices. When I'm trading forex, I usually look out for, because I believe that level is where major trader is going to push the market, and 80 out of 100 will be successful. Trust me, those levels are very strong level. Even if there's going to be a breakout, you will know that the market is about to change the trend. So nothing to regret of. So let's go to 15 minutes time frame. Let's look out for our entry. Now we have concluded that we are selling, right? So now it is entry. Sometimes a lot of traders know how to analyze market very well, but when it comes to an entry, that is where they got it wrong. But at this video now, I'm going to show you the perfect level. You can see that the market is in downtrend, and this market has been struggling with this high. Let me mark that out for you to see. I'm just looking for a tools to use. Okay, you can see that the market has been struggling to break this high, creating an equal high here. You understand? So these two equal high, we want the market to come back there and create the third one, then we make our entry. That is what we are looking out for, so that we want price to come to this resistance level, then we are going to short. So we are going to wait for any rejection here. So once we look out for any rejection at this level, then we sell. We sell. We sell to this level. Stop loss can just be like 10 pips around there. You understand? Guys, this is a perfect approach to trending markets. Once we have a trending market, simple and clear, neat, this is how it's supposed to be. So you don't have to take things, you don't have to make things complicated for yourself. So this is how easy, neat, and neat is supposed to be. No more stress. So clear thing. Now the rest is just you, how patient you are for the market to come here. You understand? So if you know what you are looking for, you should be able to have the patience for what you are looking for to happen. So you have to have the self-trust on your analysis. You understand? Self-trust is knowing what to do and do it at the time that's supposed to be done. That is what we call self-trust. So your self-trust and your self-confidence on your analysis should play the remaining roles. You understand? Trading is 80% psychology and 20% methodology. You understand? So we have done the 20% now. The remaining 80% is with you. It's you now to make sure this trade result as a winning trade, or it end as a little loss, or it end as no win or little profit. Every successful trading should end in two ways. It's either big win, small win, no win, or small loss. So if a trading result has been resulting into much loss, that means you have something to train with your psychology. You understand? So you are the one to blame, not the market. The market has created an endless opportunity for traders to choose and decide by ourselves. Everything we do in the market starts from us and ends from us. Market doesn't give us rules. We create the rules. You understand? So that is why every outcome of trading is our own outcome, not the market. You understand? Market flows like water. We create the start and we create the end. That is just it. So guys, I wish you happy trading. I think I give you a signal today. If you are watching this video on May, today is May 23. So if you watch this video today, that means you have a signal. You can go to your chart and verify this analysis. So once markets come to this resistance level, go for sell immediately. So guys, I wish you happy trading and always trade responsible.